All right, let's make this highlight a progression. If you're bullish because number one, you're bullish because you think there could be an upside breakout because of a consolidation box, and maybe there's other reasons, but you're using context where the market's going back and forth, building a range. You identify the top of the range, you identify the bottom of the range, and so do other people. And when other people identify it, most of them will try to short the top of it and get long the bottom of it because they say, wow, must be support, must be resistance. And then they put their buy stop above and their sell stop below, which triggers the breakout when it happens. So step one would be bullish, looking for an upside breakout. Then you want to see the timing, step 2 and 3, and location that you think this might happen. If you're looking for an upside breakout, you want more shorts than longs, because if there's more shorts than longs, there's more buyers than sellers. And I don't know about you, but you need more buyers than sellers for the price of anything to go up. That we'll see right there. The other thing is the confirmation of less sellers above, which we see with this tool. And you're going to see how the grays kind of kick back to nothing. And there's all kinds of buy inventory that just says, what do you mean we can't find sellers? And they have to go up the ladder. That's the definition of price discovery. Buyers and sellers. If you just imagine buyers and sellers shaking hands, that's when you get a chop. If they're continuing to put their hand out and someone's there, that's buyers meeting sellers. When buyers are putting their hand out and nobody's there to shake it, all of a sudden, that's why price goes up when they reach out and they still have to buy it, but yet nobody's there to sell it to them. So now let's go back to this chart. Here's the step one consolidation box I'm talking about. You could see the swing highs in there, and you could see the swing high in there. They're not going to hold that forever. Let other people think that they are, because other people will get stuck short and or short in here, putting the holy SHIT moment above the 18 area. As soon as you get new shorts that come in here to create the imbalance, more shorts, more buyers, all of a sudden now you got the fuel to go up. Again, that's in this tool in here. So when I play it, you're going to see our laser go from green to red. You're going to see, let me pause it again. You see all this red come in. Shorts trying to get out where they got short. That's the little white lines in the red. More shorts than longs. You could see it in these raw numbers at the bottom. And then look at our chaser tool. All this buy inventory that's waiting to get filled. And then it just shrinks to nothing above 18. And that just tees up the chance for a market to actually do this and break out to the upside and go to some other inventory build out of longs. You get more shorts in here, little rotation, more shorts, up we go. Very little sell inventory to stop it. Buyers come in here to chase and they run it up. Look at all these shorts that have the continuation. Well, I screwed up the timing of it. I tried to speed it up. Let's take you through it again. It was right in here to continue to take us up, take us up, take us up, until it got to a point right in here where a bunch of sellers started to come and say, well, I'll sell it up in here. And that's when you start to come down and you get the longs who are late. How many people get bullish because it rallied? Well, anybody can get bullish after it rallies. And if that's the only reason that gets you bullish, you're going to be late. You're going to be reaching. You're going to be long up here like these guys and be the sellers that push it down. Let me take this back to 18 again. Right in here. 18 was the top of that box. Not yet, not yet. All that red. This inventory, when it goes away, these 20 evens, there's a reason why it pops. And you see it a lot. You want shorts to continue to grow, creating the buyers that make price go up. See this 30 even? The market always goes to the orders. There are some orders here at 30 even. That's a target. Takes it out, gets back underneath it. And you could see the gray, which are the sellers, starting to grow over here. You could see these longs, once you get underneath it, just gets a little bearish. And that is also identifying a good target when you're playing the breakout. Go back to what the box I drew right in here, right? Swing high, swing high, swing high. What do you think it was going to stay as another swing high forever? That's what people think. They want to see it just do this forever. And then they could sell at all the tops and buy it at all the bottoms. It's the reason why price breaks out. Too many people in that circle actually get short. We actually see it on our tool. Nobody's willing to sell it to their buying that comes in. More buyers, less sellers. The price of anything goes up.